Traders, welcome back to another episode. This is episode 8. Let's dive in. So Ali asked, in some cases, you have specified 2 event breaks? If possible, explain a little about the conditions under which you do this. Now, at times you have noticed me, measure up 2 event breaks, because what I usually do is, on occasion, is that if I want to get into a daily supply demand level really early, I'll jump in on looking for a 5-minute or 15-minute event break. However, that's further up on the curve. What's lower down is usually that H1 event break. Now, if that 5-minute event break works, the H1 event break may not, which means that the market could pull back around and then continue to the upside, right? Because the 5-minute event break out of a daily zone is weaker than waiting for an H1 event break out of a daily zone, right? So let me demonstrate this to you straight away. So if we drop down to the 5-minute chart, let's go in here. All right, let's make this clear. So as we can see, markets moved in, it's creating engulfing, it's creating structures. We've got a structure here, which is perfect, right? So we'll call that our event break area, okay? Because we've got some friction there, markets moved up, then the markets had a really nice push down, okay? Now, if we look above here, we can see that we've got our area right here to short from, all right, after that swing, right? Market's broken this, the birth of this zone is over here, and the market has then pushed back into this zone, this area of supply that broke this area of friction, which is our event break, our event 2, and then the market has proceeded to move to the downside, all right? But what we have to watch out for is the H1 area, okay? So if we just move this over a tad, and then let's zoom in, we have an H1 event break over here where we had some friction. I mean, this I wouldn't really call an event break. Just probably would, maybe, but this massive break here, yes, we finally have our event break. So now we have 2 event breaks, all right? But this move down now, which is actually, a fairly decent move, okay? What we could potentially do is this. So we have one move that is already given us a 38 pip stop with a 267 pip profit. So that's 7-1 already just on this trade here. Okay, but now we know that this trade is that this level has broken. What we could do is potentially take maybe 50 to 60% of the profits off from this trade. Okay, and then wait for the market to then swing back into this now fresh level of supply on the H1. Okay. Sorry, that should be a short. All right. But this level is still quite large, right? In fact, this level is 95 pips. So we don't want to trade that, right? We don't want to have a 95 pip stop. Okay. So again, what we do is we drop down to a time frame. We can see that the 15-minute time frame, it's not a magic trick, guys. I've worked this out before. All right, we've got a 15-minute time frame here. We can see that we have an event break area right here. Okay, engulfing candle going into the level, got an event break area. And then we also have the level that broke it, which is now our area to go short from. Okay, so now we have potentially 2 trades. So we've got one trade. Why is this so wide? That can now move down to where the current market price is, which is 554 pips. And we also have another trade with a 45 pip stop, which is also at around 462 pips. Okay, so this gives you the potential to either, number one, if this area of H1, this event break area doesn't break, this demand area doesn't break, then you can at least take the profits off this trade, or take 70-80% off and then see how the market plays out. But since it's broken, it gives you another opportunity to then play the market back into the supply zone, H1 supply zone, that actually broke this for our event 2, which this then being the market returning into this zone being our event 3. But then we'd have to play the 5 sequence event chain now, because this zone is far too large, which is why we drop down to the 15-minute, which will then be event 4 on this event break here, and then event 5 would be the market returning into this bearish engulfing structure, what would then give us our short with a 44 pip stop loss. Quite big stop losses on this pair, as I can see, but nonetheless you've got massive opportunities. And if we drop out to the daily from this level, I think we'll be able to see that the market just plunged, because what do we have over here as the market's entered? We've got all white candles. So I always say you want all white or red candles depending on what color you use, and that would have been a 2,458 pip trade, and that's just on one of your trades. So that's how I approach using two event break areas, because the only reason why I do that is because I'm trying to get in early on a daily area of supply and demand with either a 5-minute or 15-minute event break. But then you always have to watch out for that H1 event break below to make sure that it breaks, because if it doesn't, more than likely the market will swing round and then come back and take you out. I'll see you in tomorrow's video.